Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro dollar. An immediate countering bullish open and close white Mariposa on Friday, plus a bullish engulfing pattern if only just. After the previous session's reactionary bearish opening black Mariposa. It seems the market wished to make sure that target X at 110.40 has been properly visited. Prices punched up and closed once more over the following. The bright red upper time, currently at 109.83 of the mid-April to early June shallowly bullish shift pitch hook. The very important dark blue July 2017 to November 2018 head and shoulders neckline, currently at 109.94. And the middle time, currently 110.30 of the purple late June to start of August bullish Andrews pitchfork. It was the highest close since the very start of 2024. There is still one question that I have left in my mind from last week, and that is the action from March to date a possible double bottom? I am moving closer to a conclusion, and I hope to have an answer soon. And so far today, a lower open, but a straight up move upwards, making new highs not seen since December last year and easily cradling target X. Cable, aka sterling against the US dollar. An impressive bullish open and close long white Mariposa and second bullish white soldier on Friday after the previous session's immediate countering bullish harami as well as an outside day. The base of the action was on the November 2020 low at 128.52. And prices rose up just over target X at 129.35. Now, target X was the topside target for the break up and away from the dark blue upper trend line of the mid-July to mid-August bear channel. I've drawn a new bullish Andrews pitchfork for the late June to early August action to encompass the recent declines and more very recent moves higher. We're currently in between the middle time overhead, that's currently at 133.01. and the lower time below, currently at 127.41. So far today, small continuation higher towards the middle time. Euro sterling, a second bearish black crow on Friday and a suitable follow-on low to the previous session's strong reactionary bearish double that formed part of a pipe top last week. Prices punched down through and closed below the bright red neckline, currently at 85.24 of the May to August 2022 head and shoulders continuation pattern. That's the extension of that. Finally stopping at the next support, the roughly flatlining medium moving average, currently 85.09, and a little above the very recent 50% Fibonacci line at 85.03. Below this 50% Fibonacci line, we have some clean air down towards the lesser Fibonacci line for this very same recent move at 84.74. and the April low at 84.70. On the contrary side, I said last week that there was still the possibility of a late July to date action becoming a possible very large bull flag, but it seems even more remote right now. So far today, a small exploration expansion around Friday's close, down just below the medium moving average and up to the bright red neckline above, but right now looking a little unsure. US dollar against the Japanese yen. An immediate countering bearish harami on Friday, if only just, plus a bearish open and close black Mariposa as well. This coming after the previous session's bullish closing white Mariposa. Prices were capped by the lesser Fibonacci line at 149.39, but also by the nearby 50% Fibonacci line of the July 2023 to July 2024 move at 149.61. This cap saw markets turn lower and push down through another lesser Fibonacci line at 146.69, closing midway between the two. I'm starting to wonder if the action over the last 2 weeks or so might be an ascending wedge pattern. I'll keep that idea in mind for now. Below the 146.69 level, we really don't have that much until the 50% Fibonacci line at 144.58 of the January 23 to July 24 move. Over all of this is the shadow of last month's key reversal down. So far today, a follow-on lower to Friday's action, pushing down through the 146.69 Fibonacci level and towards the 50% Fibonacci line at 144.58, but so far shying away from testing it. US dollar against the CNH, the offshore Chinese yuan. A reactionary bearish dark cloud cover pattern and bearish closing black Mariposa on Friday after the previous session's bullish long white Mariposa. This counters the build-up seen over the middle of last week of a 3-day bullish morning star pattern, morning doji star pattern. Prices dipped down and closed just below the lesser very recent Fibonacci line at 716.95. Looking below, we have limited support until the lesser Fibonacci line at 711.61, but I doubt if this is really robust. I think you would have to look at the low of 708.22 if this market really starts moving lower. All of this is in the shadow of last month's monthly key reversal down. Now, so far today, a significant follow-on lower, moving down through last week's low at 712.93 and towards that lesser Fibonacci line at 711.61. US dollar against the Mexican peso. An indecisive doji cross on Friday after the previous session's third bearish black crow. It seems the market has broken out of its previous, if short-term, imprisonment between the combined overhead resistances from March 2020 low at 1915.03 and the 50% Fibonacci line of November 2020 to April 24 move at 1920.38 and below by congestion at 1885.40 and 1879.15, only to find another area of imprisonment, this time between the now overhead congestions at 1885.40 and 1879.15, and then the congestion below at the lesser Fibonacci line at 1859.72, though it would extend this down to the congestion between 1850.81 to 1851.71. That has the February 2020 low in there at 1850.81. In the overall picture, we remain within the bright red mid-May to mid-July bullish shift pitch. We're now in between the overhead middle time, currently 1933.94, and the lower time below, currently 1832.69. Now, additionally, the short medium moving average, currently 1837.10, is nearby that lower time, just above it. So far today, it seems the start of a base being built on the lesser Fibonacci line at 1859.72 and a move higher from the open, but not as far as the congestion at 1879.15 as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.